Good morning, Fractal Effects team. Please make sure you read the disclosure before getting started. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. We'll jump onto the charts in a minute. So today was PPI day and unemployment claims. On days there's heavy news, we will not be going live for the New York Open. We want to avoid these days altogether. The only reason we're actually live today is to just more or less do some ticker tape reading, to go over certain concepts and check out what the markets are doing. Every single morning, even when there is a heavy news drop, first of all, you should be following along with these news drops. You should have access to some economic calendar. We recommend Forex Factory, but you can use any one you want, forexfactory.com. So you should know when these big news drops are happening to avoid them altogether. CPI, PPI, FOMC, non-farm payroll, anytime Fed Chair Powell speaks, you want to stay out of the market. There's a lot of manipulation happening. Usually they use these big news drops to reprice the market, and you don't want to be a part of it. You don't want to get caught on the wrong side of it. As mentioned before, day trading is not everyday trading. We do not need to find a trade setup every single day. Let's jump onto the charts. So here we have the blue zone indicator. Let's turn on the spotlight indicator, use them in conjunction with each other. I'm just going to turn the standard deviations off here, since we're not going to be actually looking for a projection. On days like today, what I recommend is you check out the Market Watch section or the blog section in the footer. We will be adding a tab at the top of the website, but right now it's in the footer. Market Watch is available to our users, and then the blogs are accessible by everybody, but we have industry news in there. We are interviewing analysts going forward. We'll be putting a lot of industry news, isolating specific sectors. So on days where there's heavy news, just again, see what the analysts are saying about any one of these stocks or commodities or anything that you follow. And then you do your top-down market analysis, which we show you in the Learning Hub. Mark up your charts, find a stock that's coming into its buy zone, and you can actually invest, swing trade, hold a little longer. So right now we have a downside expansion model. Here we have NAS on the left and we have the Dow Jones on the right. We're looking at the CFD contracts, but it would look the same regardless if you're looking at futures. So downside expansion model, but we have a buy model. Now remember, you can have two mixed models. Since these are two different indicators with two different strategies, you want to make sure you line them up. As mentioned before, it's got to be easy. It's got to be obvious to you. You want an upside expansion model and you want a buy model. So you want an upside expansion model from the spotlight strategy, and then you want a buy model with the blue zone indicator. You want these to line up. And right here, again, we've done all the daily bias for you. with our EMAs. When this is all green, that means that since the markets are fractal, you want to be looking at them on the 1 minute, the 5 minute, the 15, and all the way up to the daily. But instead of actually sifting through it, we've made that easy for you right up here. That literally lets you know that across all the time frames, daily, 4 hour, 1 hour, 30, 15, 5, and 1, right now the market is bullish. So you don't have to sift through all the different time frames to see that. Today is Thursday. On days where there is no news, or heavy news, I should say, the market likes to retrace on Thursdays back to what we call the weekly range, and that's marked out right here by the spotlight indicator with the aqua lines. In the beginning, you want to just isolate one strategy at a time. You want to look at one indicator at a time. Some of this can get too messy for beginners. It might be hard to understand what they're looking at. So it's as simple as just turning off one of the indicators. So the blue zone indicator is for New York Open all the way through until we hit 10:30 Eastern Standard Time. That's when the spotlight indicator takes over. So you can then turn off the blue zone indicator or leave it on so you see where those levels are at. Because only the blue zone indicator points out or paints out these blue zones. These blue zones are highly algorithmic zones that the market is drawn to and pushes from. And it does this based off of specific algorithms and price action. So right now we're well above this blue zone. And as mentioned before, even though we have a downside expansion model, we had a buy model. We did manipulate to the upside first. So anytime you have a buy model and you manipulate, or even if you have a sell model, if you manipulate in the direction of your model first, then expect a retracement. All that means is that was the manipulation move, but they will do another manipulation move. So as you can see, we manipulated up first, then immediately down, which created this engulfing candle, trapping traders who now thought the market was going to go short. So they jumped in here, trapped them here, and then it went off in the other direction. So we want the manipulation move to work in confluence with our strategy. If you have a buy model and we manipulate down first, that's a good sign. Then we know that the market is sweeping out this liquidity, and then it's eventually going to go in the direction we want. Keep in mind, today, being PPI news, unemployment claims, we're not looking for a trade setup, but we are going to go over certain strategies today. Here's US 30 on the right. It is yet to break either side of that manipulation zone. So here's the green line, top and bottom. We're still stuck in that range, right inside the opening gap. Make sure you watch all the videos in the Learning Hub so you understand both of these strategies and how they work in conjunction with each other. Because the spotlight indicator, it's as simple as confirmation, retracement, extension. We'll go over an example actually. Let's go over an example where we're actually getting close to getting a confirmation here. So this entire week has been heavy news. We had CPI yesterday, then Fed Chair Powell was testifying. You want to stay out of the markets anytime Fed Chair Powell speaks. It's been called one of the most valuable voices in the world. The second Fed Chair Powell speaks, you'll see the market shoot off in different directions. Causes a lot of chaotic price action. But let's back up. Let's take a look at this is Tuesday. Now let's take a look at Tuesday. So on Tuesday, we're just going to turn off the blue zone indicator here for a second. So Tuesday, we had a bit of a mixed bag. Even though we had a downside expansion model, we eventually ended up with a green bullish box. We got our green confirmation, and then it's as simple as waiting for it to retrace back into our key zones, be it the 20 EMA or the New York fair value gap, this green massive zone that was painted out with the indicator. Tapped it, and you could have found your entry in here. Unfortunately, it did come a little late. Remember, our goal is to be in a high probability trade setup 1 hour after this range formation. This range is fully formed at 10:30 Eastern Standard Time, and we want to be in a trade setup no later than 11:30. You can ride it till noon, but you want to be in the high probability trade setup no later than 11:30 Eastern Standard Time. So as soon as we got that confirmation, again, we waited for it to come back into the zone, even though the market did not leave the zone before the end of the session. There was still an active trade setup in here. This came a little late again. Yeah, this came around 12:25. But let's just say it had been a little earlier. That was the first green 5M fair value gap that was created. Between here, anytime you see two fair value gaps back to back, or even three, you can actually outline them all because we're still looking for the midpoint. The market is very efficient. So as you can see, it came back right to the midpoint, the consequence encroachment between those two fair value gaps. And then on a smaller time frame, on a 1 minute, there would have been a green fair value gap in there. Remember, we always say hit a fair value gap, create a fair value gap, hit a fair value gap on a higher time frame, drop down, and make sure that you see a fair value gap being created on a smaller time frame. For anybody who's new, all these definitions are in the Learning Hub. And as soon as you enter that position, there was room in here for a 1 to 3. That would have been your low. Even though this would have been the take profit area. That's 4.08. You would have rolled your stops to break even once you hit 2R and taken some off the table. Then you're in a safe trade and let the rest of it roll all the way to 3. For anybody who likes to trail their stops, which is completely fine if you're comfortable with it, once you've mastered the strategy, it's up to you what you want to do with it. I'd be a fool to give somebody advice who's been able to utilize this strategy and use it so efficiently that they're making 25, 30% a month. Then they can create their own rules once they get to that point. Once they find something in here that just works for them every single day or a couple of times a week, then it's up to them. Remember, strategies are not like books. Strategies are almost like manuscripts. You can edit them once you understand them. If you suddenly see something that you want to add to make it better, then so be it. That's how majority of these strategies were built. I learned strategies from my mentors that I adapted. And that's where majority of Spotlight came from. That's where the Blue Zone Indicator came from. Sitting down with quantitative analysts, looking at the markets, pattern recognition, finding pattern in the chaos. So we'll also take a look real quick at the Spotlight dashboard, which we haven't really utilized. So once you're signed up, you have access to 20 years of aggregate of what this strategy has done. So for example, today is Tuesday. This is why we look for what we look for. So there is a 73% chance, 73% chance, and again, we're looking at E-mini NASDAQ. This is the New York range. So there's the Asia dealing range, the New York dealing range, and the London dealing range. ADR, NDR, LDR. Here you can find whatever asset you're trading. Today we're looking at E-mini NASDAQ. And then you can filter this data down even further by the day, by the month. So let's look at it by the day actually. So as mentioned before, we were looking at Tuesday. So every Tuesday for the last 20 years, there's been a 72.4% chance that once the dealing range has formed and we get a confirmation, that it will not break the other side of that range. That's why we use the pattern we use. That's why we use confirmation first, retracement, then extension. 72% chance. We're using probabilities. So, okay, you got a 72% chance that it will not break. Why do we wait for it to come back into the range? Why do we look for it to hit the 20 EMA or bounce off of a key level? That's because 87.1% of that time during those 20 years, on Tuesday, the market retraced. This is a retracement back into the dealing range, into our green box. 87.1% of the time it retraced. This is all aggregate. This is all data. This is not numbers I'm making up. 87.1% of the time it came back into our range. That's why this is the place we want to look for a setup, not out here. If it just took off without us, that's why I tell you, be comfortable. Be okay with it. Don't get FOMO. If there's an 87% chance that something was going to happen, do you think you could sit comfortably and just wait on it? That's the goal. That's why you shouldn't have FOMO. Wait for the market to come to where you are. Do not chase the market. This is an algorithm. And this is proof that it's an algorithm. That's how we are able to manipulate and use these numbers. Keep in mind, if the market wasn't manipulated, if it wasn't an algorithm, I personally wouldn't trade it. I would not trust something that is based off of the buying and selling of millions of people. Excuse me, give me 1 second. Sorry, just needed some water. That would essentially lead to a chaotic price action and chaotic trading if it was based off of just the psychology of millions of people. You would never get clean price action. How would you? Support and resistance? That's what millions of people are depending on? That it's going to bounce off of a fake imaginary line? That's not how it works. The markets are controlled by a sophisticated, elegant algorithm. And what we've created here essentially is a translator of that information. So let's jump back on. And again, on Tuesday, that would have been a good, clean setup. If it just happened earlier, that would have been a good trade setup. And there was no way of getting caught here. You know, if anybody's sitting here looking and asking themselves, well, couldn't we have got caught somewhere here? No, because there was no green fair value gap. Right? We dropped, we hit the 20 EMA, but we didn't create a green fair value gap on the 5M. Kept dropping. This was the first green fair value gap that was created. Now, again, keep in mind, nothing's 100%. That's why even these statistics, right? 72%, 87%, 96.3% chance that we will get a confirmation, meaning it will break that range to one side or the other. But none of these are 100, right? None of these are 100. It even gives us an average confirmation time right here. This is Eastern Standard always, New York time. 11:17, that's when the average confirmation would have came on Tuesday. Ours was at 10:40. So about 20-30 minutes off, but within that zone is what it was predicting. So we utilize the back end, the dashboard. It even tells us how deep it retraced over the last 20 years, how far it extended in standard deviations over the last 20 years. So we use that information in conjunction with the indicator and just our regular market analysis. Let's jump back onto the charts. Let's look for another trade setup. So even though today, I think we did get a confirmation, right? Let's take a look. So again, today being as chaotic as it is, we have our downside expansion. We got a bullish confirmation. So let's take a look at what the market was saying about Thursdays in general. You have the option, by the way, to click news on and off. So if I wanted, do you want to add news days? So the percentages drop. See, again, it's a dynamic dashboard and it's updating every single day. By the way, it's taking new aggregate from every single day and adding that with the already 2 decades worth of data that we have. So suddenly this went up though, 92.5% chance that it'll retrace back into the range on news days. But again, these are days we want to avoid altogether because we'll get chaotic price action. So if it was any other day, we already had an early retracement. We touched the 20 multiple times. This would be a good area to wait for that market to come back to. Touch that 20 EMA and then create a 5-minute fair value gap. But again, today is not one of those days. Hate to sound like a broken record, but depending on if somebody joins us late, I don't want them to think that we're actually trading today. Today is, as mentioned before, a heavy news day. We want to avoid trading altogether. Just 1 second. Yeah, today is one of those days you want to go check out the Market Watch section and again see what analysts are saying about certain sectors. See if you can find any one of those stocks that you're looking at, you're interested in. See if it's coming into your buy zones. Now let's overlap the blue zone indicator on top of this. So we already remember, as mentioned before, we have a buy model. And even in a buy model, you can still use that manipulation move to your benefit, even if it manipulates in the direction that you want, because this is not a coincidence. between, if you drop a fib from here to open, look at where the market manipulated up and then came back down to 61%. Remember, that's the reversal zone anyways, between 50 and 61%. Not to mention what was sitting there. You have your London fair value gap. Tapped it. Hit the 20 EMA. This was always going to be a bullish run. And look at where we painted our fair value gap of interest. Right where there's a blue zone. We painted that before we even turned the blue zone on. So now, again, if it was any other day, this would be the area of interest to see what the market does here. That would be a retracement back into our zone. That would be touching one of our blue zones. Remember, the blue zones are highly algorithmic zones that the market is drawn to and pushes from. You want to understand the full fractal of what you're looking at. So what have we done on the daily time frame so far? One second. So we've taken out these highs, these daily highs. That means there could be a reversal here now. Once we've swept liquidity, the market could come back down to hit a daily inefficiency. Remember, that's how the market works. We're either taking out liquidity or filling in inefficiencies. So do we see any inefficiency in here? None there. So that means that it might then let's drop down to the 4 hour. Come back down. Yeah, and so far it's pretty tight. There's no inefficiencies in here. These have all been settled. It's creating an inefficiency here. But we're about 3 hours away from the next candle being printed. So it could continue running up, creating an inefficiency for it to tap into. Because right now there are none. It's pretty much tapped everything. By the way, this is as ugly as it gets. Daily consolidation doesn't mean you can't find a trade setup, but that means for the last, since December 17th, it's been consolidating back and forth. Market is yet to make a decision. So now when we come back down here, so we broke to the top, came back 60%, bullish confirmation, and a demo account. I'd be interested in just seeing what happens here once it taps this zone. US 30 still stuck in the New York fair value gap, just waiting on that. No confirmation across any other asset. So just to give you guys an overview of how well the strategy works, because we can always give you testimonials. We can flood our homepage with comments. We thought it'd be better to actually show you guys physical proof of how these strategies work. So TradingView, I don't know if it's every month or every quarter, they do a contest called Leap. And I think it runs for 20 days or something like that. But you have an opportunity. They give you, I think it was $250,000 to start with in a demo account, of course. And whoever makes the most amount by the end of that month is the winner of that contest. We have no intention of winning this contest, just because there are people in there that overtrade and they don't follow rules. I believe the last time I looked on the leaderboard, somebody was up over 1,000%. That's 1,000% in a matter of 10 days, I believe. And not all 10 days have been trading days. So clearly a lot of over trading happening. That's not what we're doing. Our goal is not to win this contest. Our goal is to show you actual proof of what this strategy is capable of doing. Just give me 1 second. So here is the contest itself. Excuse me, sorry, 1 second. So there are, I believe, 53,721 members, contestants. Here's our account right now. Again, sitting at 4,567 placing. Our goal is not to, as mentioned, to win this. Look at this. Some of these people have 595%, 617% that they've done. The winner of this, or the top of the leaderboard, is sitting at 1,264% of this TradingView contest. That was never our goal. Our goal is not to compete with these people and overtrade. Our goal is to show you consistently what this strategy is capable of doing. We're up 14%, 14.59% over the last 10 days. And our goal is to finish with somewhere between 20 to 25% at the end of this contest. Just to show you again what this strategy is capable of doing. And this is, you can check it out, TradingView. This is their actual website. This is their leaderboard. And we're sitting at 14.59% with our strategy up 36,467. Just, again, betting 1% and doing this properly and how you're supposed to be doing it. We can never compete with these people. These are people that use chaotic strategies. And keep in mind, when it's a demo account, some of these people actually open trades and let them run. There is no stop losses. That's how you get 1,264%. You don't have a stop loss. We're doing ours consistently. We're placing 4,567 amongst 53,000 people, 14.9%. I want to finish this contest at 25%. That'll show you a 25% growth over the next 30 days. And it's the same strategy. We're using the blue zone strategy for early trades. We're using the spotlight strategy for trades that fall after 10:30. We'll continue to monitor that, and I will be showing you guys on a daily. My goal is not to take a trade every single day, but every time we do, and that leaderboard updates, we'll show you exactly how our standing is in that contest. But it goes to show you what somebody's capable of doing. As long as you're consistent and stick to the rules. For a beginner, you should be aiming for 12%. One successful trade every week. 1 to 3 risk to reward ratio, that gives you 3%. As long as you're risking 1% of your balance, that gives you 12% by the end of the month. That's a better return than most banks will give you. And even the S&P, when people throw those numbers out, the S&P did on average 18%. That's on average, keep in mind. There could be months where the S&P is down. So this gives you a consistent 12% if you do it right every month. I think we also had crude oil inventories this week as well. I believe that was yesterday. Let's take a look at what oil's doing. It's a couple of different tickers. We're looking at US oil. So oil, we have a kind of a mixed model here. We had a downside expansion model originally, and then New York formed inside Asia. We've swept out Asia highs. We did have a sell model, and then we manipulated, I believe, up. So this is actually prime for a sell-off here. We're hitting a purple zone. We manipulated up. We have a downside expansion model. We're stuck between a blue zone and a purple zone. Just want to make sure the indicator paints out the fair value gaps for you. You just got to go in and actually create a box there. This might be an interesting zone. I haven't been following oil. You want to make sure you take a look at the higher time frame too, just so you know what's happening. So on the 30, the 1 hour, and the 4 hour were red, but on the daily we're still green. Our 1, our 5, and our 15 are also still green. We've had no confirmation yet. But if we were just following the blue zone indicator, we'd be focused on a sell setup here. Sell model, manipulated up, and it's a clean manipulation too. What do I mean by a clean manipulation? Clean manipulation means we've had no pullback. So we manipulated here, and it's been a straight rise all the way to the purple zone. I'd like to see it actually tap this and get below the blue zone. Once it gets below the blue zone, then you know it's most likely going to take out these lows here. There's a lot of equal relative lows down there. There are days that it's going to be like watching paint dry, but that's trading. You want it to be that slow. You don't want it to be heart pounding early in the morning trying to figure out what's happening, where's this market going. You don't want that. If it's like watching paint dry, you're doing it right. That means you're calm. That means there's actual trade setups that you see. You know where your stop loss is going to be. For example, this is just hypothetical, keep in mind. If you were to enter a position here and we saw all the right setups, that's your stop loss, 2 ticks above this, that's it. As soon as the market crosses that, you're out of the trade. People on that leaderboard that I was showing you at 1,000%, they have no stop loss. They don't care how high it goes. They're trusting their bias. They don't care how many sweeps it does. As mentioned before, for example, with NAS, we're stuck in a range right now. They're almost counting on that range. It's called mean reversion. They just use the midpoint of that range, and they keep hoping that the market keeps coming back to it. And if that was your strategy, then you could, and you had, again, no care for blowing out an account, you could just let it ride. Still no confirmation on oil. But as mentioned before, we're looking at a sell model with the blue zone indicator and a slight downside expansion model. So our bias is bearish. We manipulate it up. And we're pressed right up against a purple zone. Taking its time here. I'm sure it wants to touch that purple zone one more time. We want to see a rejection on the 5M. When you're using two strategies, as mentioned before, you have to have your own game plan. As far as our rules dictate, as soon as the spotlight strategy takes over, we only use the spotlight strategy and we use the blue zone indicator as confluence. So if this was any other day, I would wait for a confirmation, a retracement. We've already had an early retracement, so if we get a bullish confirmation, we could just take off from here. There's no need for it to come all the way back down and touch the 20 EMA. About 20 minutes left in our feed. US 30 looks like it's finally heading to take out the manipulation zone. Oil gave us a little tap on a rejection, but let's see if a fair value gap forms in here, a red fair value gap. Most likely, I think I'll drive back up into the purple zone first. US 30 getting close for a confirmation. We have a buy model with US 30. Let me turn this off for a second. So we have a downside expansion model and a buy model. We've also hit the new week opening gap. Which was pretty big for US 30. With oil, let's see if it's created a fair value gap on the 1M. Nothing as of yet. So we got a fair value gap that's been created in here. Or it's being created, I should say. Let's see if it sticks. And sometimes it's just a sliver of a fair value gap, but it's still, see, here, filled it in. We do get a confirmation on US 30 now. We do have a buy model. It's already done an early retracement. It could use any fair value gap to actually take off from here. So there's our bullish confirmation. Again, it could use any one of these fair value gaps, maybe touch that 20, and then shoot off from here. This is how you have to trust your bias. So right now, we had a buy model with US 30. Even though it broke the manipulation zone, the later it breaks it, the more obvious it is that it wants to just head in that direction. We did a double retracement. We got a bullish confirmation. As far as oil, we're stuck in the EMAs here. Still just gesticulating. Let's see what this looks like on the 5M. We got a reaction off that fair value gap. It might want to come back up and tap it one more time. That's why we always wait for that fair value gap to be created. Right now there is no 1M fair value gap after that tap. Plus we have the blue zone right under it. That's why you avoid days like this. Chaotic price action. But the second you're able to realize that, the second you're able to realize and control your FOMO, that I should just avoid today altogether because it's not going to be favorable conditions. You're going to be fighting a storm or an uphill battle. That's half of it right there. About 10 minutes left in our stream. And as far as US 30, showing some reaction off of that fair value gap. 20 EMAs right under it. Now, for favorable conditions, it would have been nice to see US 30, since we already had a bullish bias. It would have been nice to see it take out and manipulate to the downside first, bounce off this purple zone. That would have gave us all the confluence to let us know that this thing wants to go all the way up and take out previous days. That yellow line is previous day's highs. So the indicator paints that out for you now. Actually, sorry, that first line, that second line up here, that's previous day's highs. That first line is Asia highs. Nas doing one more swipe back up. There was nothing in here. I mean, sorry, US oil. US oil here on the left. Let's take a look at Nas and see what it's doing. So after that bullish confirmation, it's just floating all the way up there. That's still the zone of interest, if it was any other day, as mentioned before. Just to recap, that's how you use the Spotlight strategy in conjunction with the Spotlight dashboard. And then you utilize the blue zone strategy as confluence during the Spotlight hour. But at New York Open, you just focus primarily on the blue zone strategy, which again, we had a mixed bag. It wasn't really a buy or sell model. And then the zone was broken at 8:30, which gave us a bullish bias, and then we manipulated up, back down, at which point you would have stuck to that buy, could have rode that out. And only until that second blue zone formed or until you took out these highs. Slowly making its way back down here. There's a high probability that we're going to come back into the zone past that gray line. And when people see these probabilities, they try to take these counter trend trades. Don't do that. I've known people to take trades back, take a sell here because they know it's coming back into the zone, and then sell right here, or get out of the position right here. There's nothing about that that's interesting. You don't want to go for these small moves. If you can't see a big trade setup and a high probability trade setup, just avoid it altogether. This is how people get caught, doing silly things like that, trying to catch these small moves that aren't even 1 to 3 risk to reward. Then it's just gambling. But there's a high probability it'll come back, tap that 20, maybe even the blue zone here. Here's a second entry, back into the blue zone. So as soon as we got above the blue zone and there was a rejection here, now this is again focusing specifically only on the blue zone strategy. If this had happened earlier outside of the spotlight indicator, then you could have taken a trade right there. But it looks like it's going to come back down anyways. So it would have been futile unless you had gotten out up here with these daily highs. So again, we'll recap. Keep in mind our goal. If there's high impact news days, we're not looking to trade, especially the New York session. You want to avoid those altogether. If you want to trade in the evening, if you want to trade the Asia session or the London session on CPI and PPI days, that's fine. It's the New York session that's chaotic that you want to avoid. So here comes the market back down. We'll be wrapping up in 3 minutes, but there's a fair value gap in here as well. Just the higher probability is for it to come a little bit further down, tap this zone most likely, then head off. Make sure you understand, once again, the full crux of both strategies and master each one individually before overlapping the indicators and utilizing them. You should know why each one does what it does. And then when you see that confluence where they both meet, that's gold. That's the highest probability. And you can't even feel bad if, for whatever reason, the market goes in the opposite direction. That's like somebody tapping you on the shoulder and telling you I'll give you $1 million if you pick one of these briefcases, and it's an 85% chance of you getting it right. You can't feel bad if you get it wrong. You got to take chances like that in life. But again, it's all based off of probabilities, not gambling. So here it comes back down. US 30 also back at that fair value gap now, touching the 20. Not to mention this big New York fair value gap, the red one. But that's our time. So we'll be live next week. Please make sure you hit the subscribe button, turn on your notifications so you know when we're live. You'll get an alert on your phone. Please check us out on fractaleffects.com, where we teach high probability trading. Make sure you're reading all the extra material that we're putting up now. We'll be updating some of the video library. We'll be adding more to Market Watch. We want to be your one-stop shop for everything investing. We want to be able to teach you everything there is to know about investing and give you the tools to do this on your own. Remember, we're not financial advisors. Our goal is to turn you into your own financial advisor, to know what to look for, to know how to navigate, to understand why, and to hold yourself accountable. Here comes the market again, back into that zone. Most likely we'll get a reaction off of this. Where is previous day's high? I just want to take a look. Or are we already well above it? Okay, I was down here. Already well above it. So anyways, that's our session. We'll see you guys next week. Have a great weekend.